Artificial intelligence is no longer an emerging technology. It is becoming an organizing force. Over the next 10 years, AI will not simply improve products or automate tasks. It will reshape economic power, corporate structure, labor markets, and geopolitical influence. We are entering a decade defined by computational leverage, and leverage changes everything. Power in the modern economy has always followed control. Control over resources, control over infrastructure, control over distribution. In the industrial era, power followed oil, steel, and transportation networks. In the internet era, power followed platforms and data. In the AI era, power follows compute. The organizations and nations that control advanced computational infrastructure will control the next wave of productivity growth. But this shift will not unfold evenly. Over the next decade, three major transformations are likely. First, corporate concentration will accelerate. AI development is capital-intensive. Training frontier models requires massive investment in chips, energy, and infrastructure that favors large firms with deep balance sheets. Smaller companies may innovate at the application layer, but foundational model development and infrastructure ownership will remain concentrated. This creates a structural advantage for early leaders. Companies that secure compute capacity today may dominate markets tomorrow. Second, labor markets will fragment. Some workers will be amplified by AI, others will be displaced. High-skilled professionals who integrate AI into their workflows may experience productivity gains that increase income and influence. Engineers, analysts, researchers, strategists, roles that combine domain expertise with AI fluency may command premium compensation. But routine cognitive roles may face downward pressure. Clerical tasks, basic analysis, repetitive digital workflows. The next decade will likely reward adaptability. The premium will not simply be on knowledge. It will be on AI-augmented capability. Third, geopolitical competition will intensify. Nations that control semiconductor supply chains, energy grids capable of supporting large-scale data centers, and domestic AI ecosystems will gain strategic leverage. AI capability will increasingly influence military systems, cybersecurity operations, financial infrastructure, and supply chain management. That makes computational sovereignty a national priority. Countries that rely entirely on external AI infrastructure may face strategic vulnerability. This dynamic could reshape alliances. It could accelerate domestic manufacturing incentives. It could deepen technological bifurcation between major powers. Over the next decade, AI will not just be an economic tool, it will be a geopolitical asset. But beyond concentration and competition, there's a deeper shift underway. Decision-making itself is evolving. As AI systems become more capable, organizations may delegate increasing layers of analysis and forecasting to machine models, strategic planning, risk modeling, resource allocation, supply chain optimization. The nature of executive decision-making could change. Leaders may rely on AI-generated scenario analysis before committing capital. Financial markets may integrate AI-driven models more deeply into trading and portfolio construction. Policy institutions may use AI simulations to evaluate economic scenarios. This could increase efficiency, but it also introduces new systemic risks. If many institutions rely on similar models trained on similar data, decision-making could become correlated, and correlated systems amplify volatility. Leverage multiplies outcomes. When computational capacity expands, its influence compounds. Companies with superior models can enter adjacent industries more easily. Nations with advanced AI ecosystems can modernize defense, healthcare, logistics, and manufacturing simultaneously. This cross-sector amplification effect is powerful. Over the next decade, the dividing line in the global economy may not be digital versus analog. It may be AI integrated versus AI lagging. Firms that embed AI deeply into operations will move faster. They will price more dynamically. They will allocate capital more efficiently. They will iterate product development more rapidly. Firms that resist integration may gradually lose competitive ground. This will not happen overnight, but it will compound year after year. However, concentration of leverage raises questions. Will AI deepen economic inequality? Will returns to capital continue to outpace returns to labor? Will regulatory frameworks adapt quickly enough to maintain competitive balance? History suggests that major technological revolutions create temporary imbalance before institutional adjustment catches up. The printing press disrupted information control, industrialization disrupted labor structures, the internet disrupted media and commerce. Each wave required policy adaptation. AI will likely be no different. Education systems may need to pivot toward AI literacy. Corporate governance may need to address algorithmic accountability. Antitrust frameworks may face new challenges if infrastructure concentration limits competition. The next 10 years will not simply be about technological advancement, they will be about institutional response. By 2035, the global economy may look structurally different. AI-enhanced firms may dominate market capitalization. Nations that invested early in compute and energy infrastructure may outpace peers in GDP growth. Workflows that once required teams may require algorithms supervised by smaller human groups. Productivity growth could accelerate, but distribution of gains will remain contested. The AI power shift is not hypothetical. The capital is deployed. The infrastructure is under construction. The models are improving. The incentives are aligned. Over the next decade, power will increasingly correlate with computational capacity. The question is not whether AI will reshape economic structures. It is how quickly and who will control the leverage. And that will define the next era of global influence.